I mean, you've been a student of investment markets since those days in research at Sanford Bernstein.
Yeah.
You guys advocate a long-term investment approach at Ellevest. You talk about 10 years, 15 years. The markets have been, I feel like, kind of nutty this year, like huge run-up, dropping off.
Yeah.
What's going on? Is there anything you're noticing that might be good for our listeners to know and to appreciate about the ups and downs, the daily ebbs and flows
Same
that we're
as it
seeing in the
ever
markets?
was. Same. You know, I have this memory, Bob, of being a research analyst in 1994. And someone saying to me, you know, a legendary investor, the markets seem the most confusing now that they ever have. And every year since then, somebody says that, boy, the markets, I don't get it. I just don't every time, right? You know, and of course, it seems like the past was so predictable. What do they call it? Creeping determinism, where it was clear, you know, absolutely clear that the internet bubble was going to burst. And this subprime bubble was completely clear. And how couldn't anybody know it? And it's just because you know how the movie turned out. So this is no different. The market is, you know, the aggregation of thousands and millions of trades and opinions and perspectives that are changing in any given day or any given hour. And a volatile market just means that it hasn't figured it out. The market to be a little more concerned about always is that calm market, because there's so much that can happen that when a market is calm, you think, okay, Jaws is coming right around the corner. And that's why you have to invest for the long term. If you're in the equity markets for a trade, you're losing. You're just going to lose. And you're going to underperform. The research is clear. So investing for the long term, which means that you're investing in innovation. It means that you're investing in this economy, in the global economy. Those are fantastic bets. Who advocates those bets? The greatest investor in the history of the world, Warren Buffett. You know, it's betting on this economy, the global economy, and then giving it time so it compounds. Compounding, that eighth wonder of the world that still doesn't really make intuitive sense, you know, in which you earn money on your money and then money on your money. That's the way to go, for sure.
I mean, it sounds so simple the way you say it and the way Warren says it. And yet so many people are focused on like beating the market or like winning against someone else. So
many men are focused on beating the market. Women, and that's one of our big insights at Ellevest, that they're not interested in that game. Sure, some of them are. Yes, you know, Susie over there has a Robinhood account. But what women are interested in, they're busy. They're like, you know, I want to be able to buy a house in 5 years. I want to be able to retire at the age of 73. I want to be able to help me get there. I don't want to have to watch one of the trading shows to figure out whether I'm supposed to be zigging or zagging. Wall Street's built an enormous business around that and extracts a lot of value from investors for that quote unquote service of you know, giving advice on those trades. The winning way to invest has been to, you know, put together a plan, put together an asset allocation based on your personal characteristics, based on what you want to achieve, put in a recurring deposit if you're able to, and then let the market do its work. And that's, you know, the biggest investing mistake men make is they overtrade. The biggest investing mistake women make is they don't invest. Very different mistakes.